Welcome to Boomer Experience, guys. Bitcoin just did exactly what most retail traders fear. It broke $72,000 and didn't look back. But if you are staring at this green candle, wondering if you have missed the move, you are looking at it all wrong. Today, we are breaking down a professional break and retest setup using live data from March 5th. I'm going to show you why this $73,000 level is the most important zone on your screen, how to execute the retest without getting wigged out, and the psychological trap that 90% of traders just fell into. So look at the 4-hour time frame. We saw a massive flush down to the $60,000, as you can see on the screen in February, which cleared out the weekend leverage. What followed was a classic accumulation phase. The gray box on the screen, $71,500 to $72,200 yeah, was a multi-week resistance. Uh, Notice the candle body closure. Professionals don't trade the wick; they wait for the 4-hour candle to close above the box to confirm that supply has been absorbed. So as we approached $72,000, volume spiked. This is not just retail FOMO. This is institutional participation. Now let's drop down to the 1 minute chart to see how a professional actually enters. You see this red and green box. That's a long position tool. Instead of chasing, we wait for the price to flag or retest the previous local high. In this setup, the stop loss is placed just below the recent swing low, around $72,650, and the target the psychological $74,000 to $75,000 range. The wax candlestick data. Look at the bottom wicks on the 1 minute candle near the entry. Those wicks tells us that every time the price dipped, buyers immediately stepped in. That is your green light. On March 5th, the funding rates were actually neutral to negative during the move up. This means the move wasn't driven by over leveraged long, it was driven by spot buying and short liquidation. When shorts get squeezed, they are forced to buy back their position, which acts as fuel for our long trade. So, trading is 20% strategy and 80% psychology. The missing out fallacy. So, if you miss the 71,000 break, the market doesn't owe you an entry. If it goes to 80k dollar without you, let it. There will always be another setup. Don't look for reasons to go long just because you want to be in trade. Wait for the chart to prove it to you. So the 1% rule, never risk more than 1% of your total account on a single BTC trade, especially at all-time high levels where volatility is peak. And Bitcoin is in a price discovery phase. The $72,000 resistance is now your floor support. As long as we hold above the gray box on the 4-hour chart, the bias remains bullish. And Go to your chart, draw that $72,000 zone and look for the next 15-minute consolidation. Don't chase the green, wait for the retest. So, guys, if this breakdown helped you understand the break and retest better, hit the like button, enjoy trading, and also try to spend time on charts for backtesting, retesting everything. And also you can trade gold in London session, New York session, Asian session, which is also good, and some strategies are there available on YouTube which you can check or backtest on 1 year time frame. And so here you should have in mind that you should have your risk management should be clear. Like, don't get panic by seeing the candlestick. It shows your confidence level. So the more you panic, it means you have less command on your research. So thank you for the patience, guys. Have a good day. Take care. All the best.